What do you think we would pull in from these tariffs?
Well, I can tell you right off the bat, it's not going to be it's not going to be 6 trillion, and that's just simply because Pierre Navarro and the president. I mean, they assume to reach this estimate, they assume that you can just take the rate, multiply it by the current imports, and that's the amount of revenue we're going to bring in. But we know from historical experience that's not the case. When you impose a tariff on a good, the consequences of that are that Americans are going to buy less of that good, which is going to be less revenue remitted to the Treasury. In addition to that, you're also going to have some non-compliance effects, right? There might be some transshipment to try to get around the tariffs. There might be some relabeling of certain products, so the creations of new HTS codes, which are the codes that are used to calculate the imports of particular goods. Um, you're gonna have some element of non-compliance, and we use kind of like a lower end of the estimate of what's called the tax gap in the literature. So we assume that of all of the potential revenue, there's maybe about 8% of that revenue that the Treasury is not going to be able to collect because importers will find ways to circumvent the tariffs. Much like in the U.S. income tax system, we have some element of non-compliance and underreporting of income. And when you account for those two effects, and also another thing here that's not being considered is the revenue going that's being remitted to the Treasury through the tariffs means less revenue that can be collected from other features of our tax code, right? So you have to pay the tariff first, which means that there's going to be less money going to our income tax system, to the payroll tax, to the corporate tax, and that so there's going to be some kind of offsetting revenue effect there. When you account for these three things that I mentioned, we arrive at an estimate that's substantially below the $6 trillion, and we get just over two trillion dollars in revenue that we estimate the tariffs could bring in. And what's of note here is that the China tariffs we estimate will be bringing in very little revenue, and that's just because at 145%, the tariff is so punitively high that we estimate that it will simply not be profitable for businesses to import these inputs when they're facing that tariff rate. And for that reason we forecast that most of the Chinese imports are going to be going to zero. And then it actually the estimate actually shrinks even further for revenue when you account for the negative economic effects from the tariffs. So we estimate that the tariffs will reduce GDP by 0.8% and lead to a job loss of about 700,000 workers. When you account for those negative economic effects, that's going to mean that there's going to be even less revenue remitted to the government because the economy will be smaller. And then you add in as well the retaliatory tariffs that some countries have already announced they're going to be imposing on us. And when you account for the negative economic growth from that, that's going to reduce revenue even further. So now you're at around $1.4 trillion in total revenue that could be raised from the tariffs that are being imposed. And that's assuming that all of the reciprocal tariffs actually go into effect. So this is a 10-year revenue estimate. So we estimate when you account for all the behavioral effects I mentioned, all the economic effects, you're looking at about $1.4 trillion over 10 years.